All right, it looks like we are live, and I think we have some people that are trickling in. We are going to give everyone maybe a minute or two more, and we'll hop in. All right, well, we are at 11:02 coming up on 11:03, so let's get started because we got plenty of things to talk about today, all of which pertain to the lovely topic of sales tax. Scott, you want to start us off by just a quick introduction as to who you are? I will return in kind and we'll get rolling.
Yeah, absolutely. My name is Scott Cooper. I'm a senior account manager with xCart. We are an Avalara partner. We use them exclusively for our tax payment services so that we can help customers with all the taxes associated with product sales. But we're glad to partner with Clayton and Avalara and presenting you this valuable service.
All right, thank you, Scott. And my name is Clayton Goodhue. To all you lovely folks out there, you're stuck with me for probably the balance of the next 45 minutes. I will be doing most of the talking because today we'll be talking mostly about tax. Just a little background on me. I've been with Avalara for the last 9 years, spending most of my days helping companies navigate this lovely world of indirect tax. And when I'm not talking about tax, I am enjoying about the 4 months per year that Seattle is a wonderful place to be. And the rest of the month I'm hiding indoors. So let's get going. Agenda for today, we're talking about how an omni-channel seller has to think about tax. And that breaks out into a couple of different sections that we'll cover off on. My commitment to the people on the phone is that we will wrap with more than enough time to get through Q&A at the end. So please do think about your questions and we'll have some time at the end to have a discussion. We're going to start talking a bit about COVID-19 and its impact on the economy as it relates to retail sales and e-commerce. Then we'll get into the good stuff, which is sales tax, how it is a moving target, touch a bit about some of the changes in the international landscape. We're going to talk a bit about just tax compliances challenges in general for the e-commerce seller. And we'll cover off on some recommendations to help optimize. We won't talk all about the problems without offering up some solutions, certainly courtesy of our lovely folks over at xCart and sort of how xCart and Avalara have partnered together to both educate and also help automate. So it's hard to start a presentation on any topic without talking a bit about COVID-19 and its lasting impact and just the way that consumers behave and the way that merchants go and meet the consumer where they are these days. And as we look at some of the reopening of the economy, it is kind of stark in the sense that the e-commerce trend that has been accelerated over the last few years really doesn't seem to be going away. As states and cities reopen, e-commerce sales still rose 39% quarter over quarter from 2020 to 21. What this means for merchants is in an age of economic nexus, a concept we will touch on here in a bit, really additional challenges as their company grows, as they look to meet merchants where they are, where they gather, if that's online, if that's in marketplaces, and soon now if that's back in store. Right? How do I understand as my business changes in the way that I sell and the way that I attract consumers, how does that relate to my ever-growing and ever-changing sales tax responsibilities? And, and we see a little stat at the bottom is choosing the right technology remains a top challenge for 40% of e-commerce companies. So, looking at wonderful technologies like xCart and Avalara, how do those types of technologies help accelerate growth and not hiring a bazillion people to manage? And the numbers are staggering. I'm not going to go through every one on the slide here, but you can see retail and e-commerce is expected to continue to rise in the United States. So there's sort of two things I know for certain, and I've been doing these presentations for quite some time. This slide is often what gets people out of bed. It gets people up, it gets people excited. It's why they started their business, to attract consumers because they had a great idea or they have a great product and they want to go sell it. And they're looking to capitalize on a time that likely will see increased buying trends as the economy sort of recorrects. And certainly, as we've seen the acceleration in e-commerce, these numbers, this is what typically gets people out of bed. As companies look to pursue these numbers in different cool, unique strategies and different ways to attract merchants to their goods or service, sales tax is what keeps them up at night. And what we'll talk about sort of for the rest of the ride here is as companies look and get creative and get unique and drive business, what are the things that companies need to be aware of as they grow to make sure that sales tax is indeed not something that continues to keep them up at night? And, I would sort of be remiss if I didn't mention, I've been a consumer online exclusively for the last couple of years, and we're going to start to see some of these in-store purchases making a comeback, but potentially sort of through a different lens, right? The concepts of buy online, pick up curbside, the different ways that traditional brick and mortar retail companies have had to adapt to the last 2 years are likely trends that will not go away. They will exist and persist in the minds of at least some of the consumers, which presents an opportunity in this concept and idea of an omni-channel strategy. However, have very real challenges when it comes to tax compliance. So, said shortly, exciting times, exciting ways that we can be unique and creative in going and attracting merchants to our business, all of which have relevancy to the way that a company handles tax. So let's talk a bit about it. And I like this slide. I didn't put together this slide. I didn't come up with the name, but boy, oh boy, is it a common theme throughout the rest of what we'll talk about today. Sales tax is a moving target, and it is ever changing. And as a company further adopts an omni-channel strategy and meets their customer where they gather, it gets more and more complicated. Let's start with some of the basics. And the most recent change in the United States, which fundamentally changed the landscape of the way an e-commerce seller, a traditional e-commerce seller, has to navigate tax, was called South Dakota versus Wayfair. It's a court case that the decision was issued in the middle of 2018. So it's been around for a few years now. And basically what it said and what it intended to do was set a threshold by which if a company sells enough or a company sells enough things into a state, it gives that company, that seller, a requirement to register, collect, and remit sales tax on orders made into that state. And we'll be able to see here, there's a couple of states in the US that don't impose a sales tax, which is in gray. There is one state who hasn't decided to join the party yet. Missouri is the only state that does not have this concept of an economic nexus law. And everybody in blue has a threshold that once a company sells over that threshold, it has to start to register. It has to start to collect tax when it makes sales to consumers in that state. And it has to file and remit tax returns and pay the states at some cadence, annually, quarterly, monthly. Harking back to a concept we just talked about, which is, boy, oh boy, is this a moving target. And nobody can agree on anything when it comes to sales tax policy. The thresholds are not the same. The thresholds are not the same, both in the sense that some include dollars and some include sales. So as I sell into Georgia and I'm making sales, I have to think Am I above $100,000 in sales? Or do I have 200 plus retail orders and it's one or the other? North Dakota, only sales. California, only sales. The other thing that you'll see, which is not consistent state by state, is do they include retail sales? Do they include sales for resale, sales that are exempt in nature? How do they treat marketplace sales? So one of the first challenges that a company that is selling online or selling through multiple channels has to face is, where do I actually even need to be compliant, right? What are these states that I need to be registered and collecting and remitting sales tax in? And the central concept that most companies that sell on an e-commerce model are thinking about is this concept of economic nexus. So just to be clear, let's use an example. I'm in Seattle, Washington. If I'm only domiciled, I don't have any physical presence outside of Seattle, Washington. Washington is the only state that I have to collect sales tax in up until I reach one of these thresholds. And once I do, from that point on, I need to start complying. We have some tools that help a company sort of organize the thoughts. We have a free sales tax risk assessment that will be linked out to here in the deck. This is where it starts for a company on defining the challenge before really figuring out how am I going to go about solving it. Sticking with our theme of omni-channel commerce and how it impacts tax, we have our marketplace laws. So one place that the consumers gather more now than in any time in the history of the US is in these marketplaces, right? I'm buying on Amazon, I'm buying on Etsy, Walmart, a bunch of different marketplaces where I, as a seller, can try to sell my goods or services. And the way that marketplaces are governed with respect to sales tax is a little different than the way that a traditional seller has to comply. So more than 40 states have what is called marketplace facilitator laws, which means in 40 states, at least, Amazon, as the marketplace, is requiring to actually collect and file and remit the tax on behalf of the people that sell through the marketplace. So the onus is on the marketplace to comply, to calculate, to remit on a sale that's made through Amazon's marketplace. So where does that leave me as a seller selling my goods on Amazon? Now it's more of a game of how do I aggregate that data? How do I see if that data impacts any ways that I think about economic nexus? How does the way that I potentially engage with a program like Fulfillment by Amazon, in that now I maybe store inventory in different places, how does that strategy impact my sales tax footprint? So there's a lot of components to selling on a marketplace which fundamentally change how I need to comply. Do I need to be in additional states based on these strategies that I've adapted through marketplace sales? If there's anybody on the call that is a marketplace themselves, just pick up the phone after this and give us a call, because there's a whole host of challenges if you are actually the marketplace. But if you are selling through the marketplace, does it change where I need to collect? And then the real issue becomes, how do I get that data out? How do I separate, hey, these sales are sales that were made through Amazon. Amazon collected and remitted the tax. And oftentimes there are places on a sales tax return where you're not collecting and remitting the money, but you need to aggregate the data, reconcile the data, and file the sales tax returns correctly. So again, another example of this omni-channel approach complicating a couple of the different facets of sales tax collection remittance. Another, maybe it's tangential to the concept of omni-channel commerce, but another thing that really this acceleration of e-commerce has lended itself to, and we see this certainly with companies that reach out that are looking to solve for international tax obligations, which pose a different yet similarly complex challenge than US domestic tax compliance does. Similar to the Wayfair moment in the United States from 2018, the European Union and the UK is having sort of their Wayfair moment, and that recently there have been a series of changes in legislature, which, well, said simply, complicate a company that is shipping goods and selling goods from the United States internationally. And, you know, as we see some of the metrics to the right, the international markets are large with sort of these advents of great technologies like xCart. It really is just a click away to attract an international audience and really expand your addressable market looking internationally. But with the imposition of these new laws in the EU and the UK, it does bring about similar challenges that a company has in the United States. It does break down and adds a couple of complications to the way that duties and tariffs are handled. So it's not just a sales tax or internationally a VAT tax conversation. Now it's a conversation of, have I classified my items correctly? Do I have the correct HS codes to make sure that my goods and services clear customs? Based on the item classifications, how do I think about my customer experience in the way that duties and tariffs are handled? Is it transparent in cart, or is it a surprise from their local post office when a duty and tariff is imposed as they pick up a package? All of that piggybacks on these concepts that VAT is extremely complicated and has a lot of the same complications as the United States, and the laws are changing. Scott, my friend, it looks like you raised your hand. You want to chime in?
Yeah, I was just going to mention that, you know, for a lot of people in the e-commerce space, they might not even have any plans to do international sales, but as soon as you have a site, that might happen organically, because what's going to happen is you're going to have consumers from literally 7 billion consumers all around the planet, and they're all searching for product or services, and they may come to you with you having no expectations of serving that market wherever it is around the world, but that may happen to you anyway. So you may be, it's a good thing to have, but you may be forced to service an international market just because that demand comes to you.
That's a great point, Scott. And something that I've said over the years, and really the goal as Avalara partners with great partners like xCart, is really do not let sales tax hinder your company's ability to grow. So as you do, maybe you have a consumer that comes on that's in the UK, that's in Spain, that's in Canada, or neighbors to the north. To understand, you know, how you navigate tax and to have a partner that will help you go and potentially turn what was an unknown customer from the UK into a strategy that looks to serve that market is what we're here to do. And Scott, you know, it's a great point. The barriers of commerce are certainly sort of deteriorating as this rise of e-commerce continues to shape the landscape. So one thing that just started July 2021 is a series of legislations that the UK has a similar rule that, to provide some context, is a program that was implemented by the EU to stop what they saw as rampant VAT fraud for low consignment carts. So in the EU, starting on July 1st, there is this advent called the Import One-Stop Shop. And basically what the EU has said is that importers that are shipping goods into the EU member countries are now responsible for the collection and the remittance of VAT tax on low value carts. I believe it's anything that's under 150 euros. The responsibility is now on the seller to calculate VAT, to be registered, and to remit VAT to the EU member countries. They also kind of did a nice thing, which was they imposed a series of new legislations, which certainly impacts almost everybody that's selling into the EU that doesn't have a cart that's always over 150 euros. They implemented the Import One-Stop Shop referred to as iOS, which is a way that a company can have a single registration, have a single intermediary, and file a single set of returns that covers off on compliance for all of the EU member states. So it's not as if a company now needs to go register in every single EU member country. Most companies that are looking at this new piece of legislation are looking for a partner to do iOS, one registration, one intermediary, one set of returns that covers all of the EU member nations. And now they'll basically need to collect tax whenever they have a low consignment order that goes into one of those countries. The UK has a similar law, now no longer a member of the EU, sort of catered at the same thing, an imposition on importers to be the ones that are now responsible for collecting and remitting VAT. And again, as I suggested, if you're running a marketplace out there, I'll send you out the deck, give us a call after, because the requirements, both internationally and domestically, for a company that is running a marketplace that is facilitating a bunch of different sellers with a bunch of different buyers, is incredibly complicated. So we'll skip this part, just give us a call and we'll talk about your specific scenario. So if we think about our story up until this point, we are coming up with cool new ways to attract merchants, to meet them where they gather, online, social media, in person, through marketplaces. And we're thinking about, how do those strategies impact my responsibilities from a tax perspective? This funny word called Nexus, which just simply means, do I have a responsibility to collect tax when I send an order into Texas or when I send an order into Spain? And so the beginning of the whole story is, how do we define where a company needs to collect tax by way of how they do business and how much goods or services that they sell? And then we've defined sort of the beginning of our problem. We're going to walk through a couple of things that make tax compliance so difficult for a company that is even in a couple of states or a couple of countries. And we'll talk through the high level concepts of the challenges a company faces once they know, yes, I have some states or some countries in which I need to comply. The first starts with, are your goods and services even taxable, right? You may have a responsibility as a company to collect and remit tax when you sell something into a state. But if the thing that you sell is not taxable or is subject to varying taxability, that's typically the next concept in this, well, how do I solve this problem? And there's a couple of concepts that are listed on the screen here. You know, I'll kind of back it up from front to back. So if you have like an exempt sales channel, I am making sales for the purposes of resell, I'm selling to government, I have direct pay permits, right? Anything that I sell to someone that's going to take on the tax responsibility for me, that's one challenge. The more common challenge we see in the e-commerce sort of B2C selling scenario is product taxability. So these are different rules that differ completely state by state, country by country, in what are taxable. We commonly see clothing, food, services, software, collectible coins, believe it or not, have some just insane different ways that states view the taxability. One that's pretty common for most companies that operate an e-commerce business is shipping and handling. There are around 25 states that will charge tax on the shipping line, which leaves a balance of about 21 that don't. The 25 states that do tax shipping and handling, there are a number of them that only tax shipping and handling if the rest of the order is taxable. So following through to our concept of, if I have a wholesale order and I charge for shipping, if the rest of the order is exempt, taxability on shipping and handling may change. So it really is prevalent to pretty much anyone that's selling in e-commerce, and really understanding, when I sell this good, this service, when I charge for shipping and handling, depending on the different ways that I may ship and or handle, this is the first concept that companies need to try to master. And then comes the thing that everybody typically thinks about, which is arguably the most complex thing, is how do I maintain these thousands of different combinations of rates and rules and boundaries? So the United States is a jigsaw puzzle that has thousands of different state, county, city, and local taxing rates. And the original train of thought when I got started at Avalara 9 years ago is a lot of companies just try to do it by zip codes or come up with some rudimentary way to tag a geographic boundary and then figure out, all right, what are all the different rates in here? And certainly in the age of the consumer and customer experience, and on the other side, making sure that you're not at a compliance risk, calculating the correct rate is super important. And if you're on one side of the street and it's 9% here, and the other side of the street it's a 5% tax rate, you either are going to have an unhappy customer that got charged the wrong rate, or you potentially are going to accrue a compliance risk if you charge 5%, but you should have charged 9%. So zip codes just really aren't the right tool for the job. You got to have a rooftop look to make sure you're charging the correct sales tax rates. We bring it back down to our omnichannel story, and we layer over this concept of where the heck do I need to collect tax? How do I manage product taxability and the application of the correct state, local, city rates, which change every month, by the way? And then how do I make those decisions in all of the different places that I sell now? In my website, in my store, through social media, on a marketplace. It's a challenge of how do I calculate or how do I aggregate? And how do I make sure I'm covered off as my strategies expand both from a platform's perspective or from a geographic perspective, to know that I am not either sacrificing growth for the purposes of sales tax requirements or growing so fast that I'm building up a compliance risk for my company. And finally, we talk with a lot of companies that say, hey, I do X amount of revenue and I'm really focused on the people that I need to collect sales tax from, because boy, it's a pain. Product taxability, Nexus, calculation, remittance, aggregation, huge problem. And then we uncover the other side of their business and they say, 70% of my business is to resellers. And the challenge on that side is equally as risky, right? You have to collect the proper documentation and store it, and the forms change state by state to prove, if you do get audited, that you did not need to collect sales tax on that invoice because you have your resale certificate or you have your certificate that proves that it's a government entity and you didn't need to charge some tax. So in a B2B scenario, the problem is different, but challenging all the same. And, I know I try to say I keep it short and sweet, and we're about 30 minutes in. We're just going to talk a bit about how Avalara partners with xCart to help companies sort of optimize and automate and get to a position where they can focus on growing their business and not worrying about tax. And really, when you look at just kind of the fundamentals, you better make sure it integrates with your platform, right? And so the lovely folks at xCart have a pre-built integration. We've been partners for quite some time. So whoever's on the call that's using xCart or that's evaluating a move to xCart, big check box on that first box. You want something that's cloud-based. You want something that delivers tax in real time. Tax is constantly changing. The rules on product taxability are constantly changing. Even the thresholds in Economic Nexus are changing. So you want something that returns in live time, the most up-to-date calculation in cart, or aggregation from a marketplace that understands the rules. Cloud is the way to go. Points for scalability is a big one. We just covered a bunch of different things that, as I change the way that I go to market or that I think about my business or that I attract a consumer, you want to make sure that all of a sudden you go international and your tax partner can help. All of a sudden you sell on Walmart and Amazon, we got you covered there as well. So poised for scalability and the concept of tax not hindering growth is key. And for anyone that's in the B2B space, we just touched on why it's also imperative to look at tax, even if I'm selling something that's not a business to consumer. This slide hasn't been in a lot of the decks until recent, but consider your point of sale strategy too, as companies come back and look at maybe a brick and mortar or retail scenario as well. It's easy to forget about, hey, if I'm doing a buy online, pick up in store, buy in store, ship to house, or I'm just running, more of a traditional model in retail, those tax dollars count as well. And as we look at the way, just from a million feet, that Avalara helps companies navigate, the first thing that's not on this slide is just education. Most commonly, when we work with companies that have gotten into trouble, it's because they just lack sort of an awareness of Nexus, or the states that they need to be in, or the rules around marketplace or e-com or B2B. So kudos to everyone that's either on here or listening to the webinar. That's the most important part. How do we define the problem? And Avalara is here to support. If it's a phone call after to talk about your business model, your venture into drop shipping, there's a bunch of concepts that we didn't really cover off on today. And from there, we look at the way that our technologies integrate with xCart to automate. The first component is tax calculation. So we have a program that plugs into xCart, and at the moment of checkout, looks at rates and rules and boundaries and makes a tax determination in live time. That pairs with our cert capture solution, which is really catered to a B2B motion if you want to make sure that your B2B customers are not charged tax and you have the proper documentation to provide. And at the end of the day, a company is required to both collect and remit tax. Filing tax returns is incredibly confusing and often a data exercise of aggregation and consolidation and treasury, et cetera. Avalara's got a neat and tidy solution to help automate everything in terms of your monthly or annual or quarterly filing obligations. And as we weave all these concepts together, we think about the subsecond challenge of tax. And it really starts in that magical moment, which you work so hard to do to get that customer to hit purchase. And where Avalara picks up is from there in subsecond time. It's going to look at validating the address. It's going to look at where am I selling it from? And it's going to look at where am I selling it to? And it's going to apply and assign the applicable jurisdictions. It's going to check, hey, is this one of our wholesale accounts? Should we even be charging them tax? It's going to tell you, in some bizarre circumstances, a Kit Kat is exempt and a Snickers is taxable. So it will help manage and track all the concepts of product taxability so you don't need to become an expert. It will look at, is there a tax holiday? Clothing is a big one. Some days of the year, clothing is not taxable in different states. It's going to, in subsecond time, return that magical $11.54 back into cart so you collect the right amount of tax from your customers. And at the end of the day, it will sync everything down and make it super simple for either you or Avalara on your behalf to file a tax and to get back to the business of being in business and not staying up at night thinking about sales tax. So how do we do? 35 minutes worth talking about tax. We will open it up for some Q&A. If anyone has a question, I will pop on over to the chat here and see if we got anything. I'm not seeing anything quite yet.
I'd be interested to know if the attendees on the call, are most of you just focused on domestic business, or some of you looking at international business? What's your what's your drivers around sitting in the Avalara presentation and learning a little bit more about how it manages taxes? Just love to get your feedback.
It is possible that I put everyone to sleep. Wouldn't be the first time, but if anybody out there cares to chime in, we'd love to hear your story.
Oh, here's a couple questions on the chat from registration. How do I set tax by state? I do not understand the formula to fill that out. And it looks like there's another question. Amazon recently changed the way it handles forwarded tax receipts. How does that change Florida business quarterly filings?
So let me take the first question here. So how do you set tax by state? I don't understand the formula to fill it out. So the first step in figuring out, like, you know, do I need to set up tax collection in a state, is you need to look at your business and you need to figure out, by the way that you operate, are you required to collect tax in that state? Have I sold over $100,000 or over 200 orders? Do I have property or inventory or people? Do I have any physical presence in that state? And once you do identify, yes, I have a responsibility in Texas to be on the hook as a seller for tax, the first thing you need to do is look to get registered with Texas for a sales tax permit, which is different than a business license. Once you do get a sales tax permit from Texas, then you are legally allowed and required to collect tax when you make sales into that state. And that becomes a question that Avalara can help with, of either you find a way to automatically use an application to calculate tax on your behalf, or you need to figure out how to set up, you know, the native tax structures in your e-commerce platform to calculate Texas tax. When you register with Texas, Texas will say, hey, you got to file this type of return and you got to file at this frequency. And that's the last step, where now you've calculated, you register, you started to calculate, and either annually, quarterly, or monthly, you'll have to pay Texas and fill out their unique sales and use tax return. I hope that answers your question. If it doesn't, please feel free to reach out directly after the call, and we can set up some time to chat. The other question is specific to Amazon and the way that it handles Florida tax receipts. I am unfamiliar with, you know, and maybe that, I think the question may be catered to the marketplace facilitator laws and its potential that Florida just rolled out. I know Florida just rolled out an economic nexus law. I don't know how to answer the question about quarterly filings. It may require you to file, well, it may create the imposition that Amazon collects tax on your behalf in Florida, and therefore you do not need to remit and pay the Amazon dollars on your quarterly return. I'd love to talk about your scenario in a little bit more detail. So again, please feel free to reach out. We can have a one-on-one conversation. And there'll be some, I believe the deck's going to go out. There's some ways to contact us. There, on the Nexus slide, there's a couple of ways to do a free sales and use tax assessment, just to try to kind of get started. Certainly give us a shout, send us an email, and we can have a more one-on-one conversation specific to your company, the way that you operate, and the questions that you have around tax. And boom, there it is from Caroline. Well, the replay is coming out, and some resources on how to get in touch with us. Well, hey, you know, first and foremost, thanks to our friends at xCart for doing this with us. Thanks to everyone on the call for listening and hopefully learning a little something today. That's all from me. Scott, anything else from you?
No, just wanted to, as you said, Clayton, thank everybody for participating. Please, if you have any questions, either on Avalara or on xCart, feel free to contact us, and we thank you very much for your time.